Good morning, good afternoon, good evening, depending where you are on the wonderful planet, and welcome to the Tuesday, 1st of February, first day of the month, 2022, Tuesday the 1st of February, Bull versus Bear webinar with Steve Miley on the Call for Trade Day. Welcome everyone. We're going to go for our usual regular run. So if you want to say hello into the chat, if you're watching with us live, if you want to say hello, just pop it into the chat underneath the video streaming. And if you want to ask any questions, please feel free to ask questions at any time when you're on the live webinars. One of the advantages on the live webinars, obviously, is you can ask questions. So please do feel free to interact and ask questions if you so feel like it. It's going to go for our usual run through in here today. Not too much to add to recent commentary regarding what's going on in the markets. Some updates though, so we'll go through those. We'll look at the calendar, what we've had, what we've got coming up today. We'll take a look at both the macro calendar, the fundamental economic calendar, and then also take a look at the micro calendar. That's the earnings calendar, who's reporting today from the major US stocks, and that might influence the major US equity indices. We'll also then take a look at some articles I've dug out, and I'm going to run through just to describe what's going on the macroeconomic fundamental side, geopolitical side, right here, right now. What are the real events that are impacting financial markets and have been impacting financial markets, and we expect to continue to impact. And then we are going to take a look at some charts and see where the opportunities might lie for today. Let's kick off with the calendar. So to this morning so far, and going into this afternoon as well, it's all about the PMI data. So the big data that we have globally is from markets. That's MARKIT. Okay, and if I go here, you'll see the website for market. So IHS Market, there we are. And IHS Market are a data production company, okay, and they do all sorts of things. And here, and one of their major things that they do is the release of the Purchasing Managers Index. So they do a survey, and they've been doing this for many years now. And the reason the Purchasing Managers Index survey is looked at, so let's see if I can drill down. It might be a matter of coming back out and going research and analysis. Where are we? Maritime Financial Services is probably in here. Here we go. Credit indices, municipal calendar. So here we go. Here's some of them here coming out. Okay, so there's our Purchasing Managers Index, PMI. Okay. So they released this Purchasing Managers Index, and they do it on a monthly basis. And the reason it's so watched, I was at Credit Suisse for quite a number of years, and one of their most senior and respected analysts on the strategy side was Jonathan Wilmot, who had a very long distinguished career and is a super smart guy. And he built a whole set of indicators, or developed a whole set of indicators called risk appetite indicators. And it was shown that the PMI, the Purchasing Managers Index data, was a good precursor to changes in national and global economy. The national economies and global economies, looking at maybe 1 to 2 months. Okay, so it's a good leading indicator. So that's why it's so looked at. And in here, what we're looking at is we're looking at the data for Europe from market the data, so MARKIT. So you've had that data coming out through this morning, and we get that globally. So that comes from on all the major nations, and it's a survey of the purchasing managers. And the reason why it gives you a good leading indicator, because these guys and ladies are in corporations making decisions, looking up and down the supply chain and seeing what's going on in their individual markets, in their individual industries, and making decisions. So in this, whether they're feeling more confident or less confident about maybe their own company, their own industry, or for the national economy or the global economy. And so it gives us a reading on what they are feeling. So it's a sentiment index, okay? It's not what they're actually doing. It's a sentiment index, how they're feeling about it. And how they're feeling about it is obviously, going to be, how those thoughts and feelings are, is going to end up making the decisions and changes, okay? So, and then that will then impact further down, up and down supply chains, and then having impacts then going into the actual national and global economies. So that's why it's important. That's why it's important data. Now, the big, market are the producer of all this global data. However, the ISM data, which is the Institute of Supply and Management in the US, is deemed as more important data for the US, and it always gets a bigger market reaction. Market do produce it for the US as well, so you can see it in here. Manufacturing PMI comes out 15 minutes before, so that's at 9:45. So the US market data is coming out at 9:45 Eastern time, 8:45 Central. But then we get the ISM data, which is viewed as more important. That comes out at 10 a.m. Eastern and 9 a.m. Central time. And we've already had the data, and you can see it's mostly a mixed bag, but mostly on the more positive side. So you can see the green and reds in here. But so that was German retail sales that missed up there earlier on today. But if we look down through, and the manufacturing PMI from France came in bang on expectations. Slight miss here on the German, which is very important, but we had the unemployment data from Germany was better than expected. The Eurozone as a whole, very slight miss, and the PMI data for the UK, a slight beat, and the unemployment rate a slight beat. So overall, kind of in line with expectations to mostly slightly stronger, but with some slightly weaker. So pretty much in line, which is what the market probably wants to see, an economy that's continuing to grow and to expand, but not too much overheating that is going to force, in this case, the European Central Bank and the Bank of England to maybe move even more aggressively than we're anticipating. And then this afternoon, as I say, we've got this data coming out, so we're definitely watching out for the market data, but certainly more eyes on the 10 a.m. Eastern, 9 a.m. Central ISM manufacturing PMI data. So the PMI data more important than the employment data in here. That's what we're going to be keeping our eye on today. Later on tonight, if you're looking trading New Zealand dollar, watch out. We've got the employment report, which is a big report for New Zealand, but obviously not for most of the other markets that we're looking at. So that's what we've got coming up on the big data, the national macroeconomic data today. Let's take a look at where we're looking at on the corporate side in here today. The earnings reports, well, all their eyes are going to be on Google today. So Google, it's not got, over here on the investing.com earnings calendar, we see that whether it comes out before or after the bell, I'm 99% sure, I'm not 100%, but that Google is one of those that reports after the bell. So we're watching out for Google revenue and earnings coming out after the bell. We've already had ExxonMobil out today, who missed on revenue, beat on earnings. PayPal also coming out after the bell today. And AMD, maybe we'll keep an eye on those as well, and maybe even Starbucks. We've already had UPS out, which beat on both fronts in here today. So so far, mostly positive what we've seen today, and then most of the stuff we're looking for today now coming after the bell, after the close. Where do we sit going into today? Well, European markets are up. They're playing catch up with the strong rally we saw in the afternoon session. So remember, these are the cash markets playing catch up with the US markets, which had a very, very strong close after European markets closed yesterday. So they're playing catch up in here. Europe notably higher. And if we look at what the US is actually doing, so there's the strong rallies that we saw in the US yesterday. The Dow was up just over 1%, the S&P nearly 2%. But if we go down to what's going on in here today on the futures markets, just a slight dip. So equity markets in the US slightly just dipping back lower from the very strong gains that we saw yesterday, particularly going into the close. Let's take a look at Bloomberg's 5 things to start your day. Now, the focus has kind of slightly shifted away from, we had a lot of focus on the Fed, obviously, a lot of focus on central banks, slight shift away from that. But I just want to recap on some stuff that went through yesterday. So the markets are obviously getting very, 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 very hawkish on how the Fed are going to move. They're thinking the Fed are going to be particularly hawkish. We've now got 5 rate hikes being priced in by the money markets, by the interest rate, cash markets and interest rate futures markets in here, forward markets and futures markets. So we're also seeing in here most of the major investment banks highlighting they're looking for 5 rate hikes. Goldman posting that last week, and many of the other large investment banks highlighting now 5 rate hikes this week. However, maybe the Fed are getting a little concerned. The market's getting a little ahead of itself. So we had 4 Fed officials speaking yesterday, and all of them emphasizing gradual tightening, okay, and the need for moves to be data dependent, okay. So George yesterday, a policy voter this year, unexpected adjustments are in nobody's interest, and then Daly emphasized the need not to be disruptive. Okay, so if anything, the Fed are maybe trying to talk the markets back from their super hawkish stance, and then that encouraged more of a risk-on theme to continue. So we saw equity markets, which had a very, very, very strong close on Friday. They looked like, we've discussed this I've spoke about this multiple times, that they look like they're putting in basing patterns. They confirmed those basing patterns with strong recoveries yesterday. And for me, particularly S&P, and I put it on my, if we go back in here, I'm not actually going to go. If you go to the trading room in here, I'm not going to go there because it's streaming the bull versus bear this webinar that we're on right now, and then we'll get a load of feedback on that. So, but if you go to the trading room, go to where the technical analysis uploads are, you can see that on the longer term basis, I've shifted my view now back to bullish on the S&P 500. If you go and take a look at today's market report in there, but going back to where we were, 5 things to start your day in here, we did see that risk on move, and we also saw with that risk on move, we saw commodity currencies pushing significantly higher. You'll see that on the charts as well in the reports, and we saw the dollar weaken across the board in here, as we saw, and Treasury yields drop to lower yields, okay, as the Fed, these 4 Fed speakers kind of stepped back from that more hawkish stance that we've grown accustomed to over the last month, that has seen the big risk-off move in stock indices and seen the big rally in the dollar and the big move higher in yields. We saw kind of a reverse of that. We saw a dollar slightly weaker, we saw the yields slightly lower, and we saw equity markets like that and push even higher, having had a really strong close on Friday. The other thing to focus on is that we are getting diplomatic maneuvers here on Ukraine. Prime Minister Boris Johnson from the UK and the Netherlands Prime Minister are visiting Ukraine today. Putin is meeting his European ally from Hungary, Viktor Orban. He's seeing him. We have various, so look in here, US Secretary of State Blinken will speak by phone with Russian Foreign Minister Sergei Lavrov following the US proposal of de-escalating the situation. So we're having kind of lots of positive diplomatic moves. So that's kind of seeing markets less concerned. And there's an article on here, a couple of articles I've dug at Britain, Poland, and Ukraine in cooperation talks. So that's going on. And then also in here, there's a good article. If you want to go and Google as well, I'm going to put it into the chat in here. But I read through this. Is a good article. The odds of actually what might happen in here. So I've put that into below the chat. If you're watching live, you should be able to see that. Yeah, talking about the odds. And basically, with the analysis that's been done here, the analysis, where is it? Here we are. It was, here we go. So Amundi, they put a 6% chance of peaceful compromise, 30% probability for a limited military incursion, only a 10% risk of a full-scale invasion. So that's why markets are reacting relatively positively. Okay, and then this is done with looking at 5-year CDs in here, Russian CDs. So take a look at that interesting article I found anyway. So markets are moving that way, and then as well in here, another thing to note: the U.S. Treasury economist sees inflation pressures easing if the pandemic recedes. As the pandemic recedes, which we're expecting it to, obviously, we're looking for a reduced inflationary pressures, and that's coming from one of the U.S. Treasury economists. Okay, the U.S. Treasury top economist. Okay, said on Monday. So again in here, the Fed backing off, the U.S. Treasury economist backing off, diplomatic solution. All of this points us back to risk off. And again, look, after volatile vanity, world stocks start February on firm tone, so we're starting off more positive in here, and we can certainly see that in the charts. So I'll go to take a look at the charts now. And here, and you can see these are the trend lines we were talking about more recently, like we've been focusing on. Here's the NASDAQ 1 hour chart. We were hovering above that, boom, up through that. If we go take a look at the S&P 500, 30-minute chart, there's the trend lines. The trend lines we've drawing. Remember, we've broken it. We were setting back. Look, used the trend line, held above the trend line, and boom, back higher again in here. And if we take a look at those both on the NASDAQ on the daily, look, so really strong close on Friday, super strong rally yesterday, and actually nudging higher on the futures in here as we speak, and a similar tail now in here, nudging higher again in here on the S&P 500. This looks like a base now. We go and look at them on the 1 hour charts. I can only advocate in here. I mean, they are a little stretch at the moment, but I can only advocate now playing this from a technical analysis perspective, playing it from the long side, and the fundamentals are backing that up as well. Okay, so for me, all the risk is higher. We're obviously watching for the data today. We're looking at that market data at 10 a.m. Eastern, and we're also looking after the bell. Remember, we have the Google data, so we're watching out for both those. But I'm really bullish in here now on the equity side. If we take a look in here now, this is the daily chart on oil. It's been a bit of a roller coaster in here. This break to the upside that we saw through January is we're in that risk off mode. Looked like we're going to push higher, but then we've had a significant setback from the end of last week as we saw a little bit of the dollar starting to roll over. Market moved notably lower and then trying to rebound there. So back into this this like this broader range environment, and with the rebound, probably just about playing this from the long side now. The market's been very negative, held in. Going into the day, I was looking at this as more from the short side, but if you look at my reports, they're playing this from the short side. Let's just pop this out a bit bigger. Playing it from the short side, but if you look at this, it looks like we've got a little turning point gone in, and if we go into the 1 hour chart on gold, it's a good little uptrend now forming on the 1 hour chart. We've got higher highs and higher lows. We've broken above this higher low. So all the threat, I think, now for gold is still to the upside. So probably playing that one from the long side. Let's take a look at oil. One thing I wanted to note on oil, I'm not sure if it's actually, they've got it in 5 things to start your day. Okay, so strongest January in decades for oil in here, but we've got OPEC Plus meeting tomorrow. So the market may calm down a little bit in here. So we are looking for a increase in production to kind of trying to keep a lid on the oil price in here, but it could be difficult in the moment because the lack of investment in infrastructure in many of the OPEC and OPEC Plus members means that they can't turn on the taps as quickly as previously. So although they're trying to increase supply. It's not as easy as just turning on the taps and creating that supply. So they are trying to. So we're expecting. So look in here. So the outcome of this is evenly balanced between a 400,000 barrels per day production increase and a much bigger height. So if it's obviously on the much larger side, if we get 400,000 barrels extra a day, that's probably built into the market. A bigger increase in supply, but we won't get that till tomorrow. So that's not on the agenda for the day. Going back to the chart in here though. On the oil side, go to the daily first of all. You can see the market's been very hesitant. And it's no surprise. We spoke about this yesterday. We had two, at the end of last week, we had two doji patterns. The market made a new high. Doji yesterday did dip. It was doji when we came on. Did nudge just higher, but then look, nudging higher and failing back lower. The market's been little change since last Thursday. If you look where it's actually gone, and we'll see that better if we go into a 1 hour chart. So in here since last Thursday, so that's about here. You can see the market just kind of sideways. Yeah, we're kind of nudging higher. So maybe slightly bullish in here, but I don't think I don't think this is going to do too much unless we get something really aggressive. We had a really aggressive move higher on stocks yesterday, and oil couldn't really manage a strong rebound or a strong advance. We're probably not going to get too much out of this unless we get anything maybe out of the Ukraine situation, Russia-Ukraine situation. If we get any kind of positivity on that, we'll probably see oil actually lower. As we get concerns about supply easing, and then also in here, if we get any rumours out of OPEC Plus. But at the moment in here, probably looking to leave this one alone until we get further macro fundamental developments. Okay. Right, that's what I've got in here for today, guys. If you want to send us any questions about the webinar or any feedback, please do feel free to do that. I'll be back tomorrow on Wednesday for another Bull versus Bear webinar. Until then, stay safe, take care, and have a great trading day.